really vague, short and long. Like you could go into, I mean, I could talk about this for an hour and go into extreme detail, but again, my channel's meant for under 10 minutes. Just, I don't want to get like way into those details, because to be honest, like this is really where you just want to have an idea just to understand. So that's why I do, you know, the pricing predictions are just easier. Add to cost base, this is great. So if you, let's just say you buy stock for $100, and let's just say, I'm just gonna use the country lockdown as an example. I'm not saying it is or is gonna or whatever, just so we can all relate here. Country goes on lockdown, people panic, people sell, market drops 20, 30%. Possible, okay? Well, guess what? If you bought a stock for $100, right? And you like that stock at $100, well, if it drops 20%, okay, now it's 80, right? Well, wouldn't you love to buy that stock at 80? So that's really the mindset you need. You don't want to panic if it goes down. If it goes down, it just gives you a bigger buying opportunity. Like, you should be happy about that. It's kind of weird. Like your mind will tell you one thing, but you want to, or like your gut, but you want to do the opposite of how you feel. So in that case, you want to buy again. Like, if possible, I would double down. So I would double it down and then drive your cost base, which then would be 90, because you just split it. So when the lockdown ends and it comes back up, you know, this stock in a year or two or 3 or 4 could be 150. And then guess what? Instead of having a cost base at 100, your cost base is 90. So your return is greater at 150. So that's kind of really what you want to, like, that's the mindset you need for adding. So don't panic if things sell. As long as you're in a good company, you're fine. And there's you know, I'll make another video about how to value a good company, but there's a lot of information you need to understand and learn to do it. And if it does go down or just fluctuates, you know, say like kangaroos, and you know, the market goes like that, right? Up a little, down a little, up a little, down a little, up a little, down a little, like, okay, it's kangarooing basically, right? So when you build out a position, you never want to buy it just one time. You want to buy it like 3 to 10 times. That's what I try doing. I try buying like a position 3 to 10 times in this state. If it goes down a lot, I'll buy down here. If it makes a run, I'll hold. If it does this, I'll try buying here and here and here. And next thing you know, you have a pretty big position. Whereas, like, that's what I was saying. If you have $100 or $50 or whatever, okay, if a stock's like 30 bucks and you put in $100 every 2 weeks, okay, then you keep adding. You have more shares. Well, when the good news hits that you think is going to happen, well, the stock will then go up, and then it might correct up here. And then guess what? You were buying down here the whole time. So, you know, and then when you hit a year, say year's right here, well, now you're in long-term debt or long-term gains. So now you're saving tax reasons. So, like, this is why I do it, and this is why I believe in it so much. So really, you want to build a position out, and then that leads to what I just said right there, massive gains. So you could go up, and then you really, you know, do that. And then another thing is, I didn't put this as a pros, I just thought about it. Dividend payout. A lot of stocks have dividends. So usually they pay quarterly, and on in like the you know, the business overview, it will tell you what the percentage is or dollar amount. So usually it's something crazy, especially when you're starting out. Like, it's going to be probably quarters or dollars, but it adds up and it compounds over time. The better the company does, usually they raise dividends. So they'll add, like, let's just say it's 50 cents a share, or they might raise it to like $1 a share. So that's high, but that's what that means. So that is the difference between long-term and short. I do long-term, and that is mainly the reason why in like a really short video. I hope you understand that. If you have any questions, just put a comment down below. Also, make sure you like and subscribe if this helped you out, or you have any questions or anything like that. It helps the channel. Yeah, that's really it. I mean, it's you know, there's not a right or wrong way. I'm not saying short-term, you know, is bad or it's just not what I do. So if you're on this channel and you want to learn how to invest and gain wealth, it's going to be this way. And I know that sucks because everyone wants to make a quick buck, but in reality, for every one person that does it, I'd say 10 fail. So it's just not worth it. So that's all I got. Peace.